Well, hello, folks. Top Gun here, and I got a good one for you today. So, I finally got a bit of time off, and I'm going to come back and elaborate on some math. But right now, another market chart analysis. I did a tweet, but let's actually have a look at things. I want to find out why they're doing what they're doing, right? So, the market has kicked off and opened for the day. So, let's have a look here. And all right, we've got pain in the SPX, pain in the NASDAQ, and the Dow Jones, all dropping hard at the beginning of the bell today. What's going on with the dollar? Even the dollar is losing strength as we headed into this. Ooh, all right. Well, the dollar is bottoming this hour, it looks like, as, NASDAQ and everything else are falling hard, so we'll have to see. The first half hour after the bell rings, always a little something, but look at that. The dollar is starting to just slowly come up now. But we still have pain coming in the market. Apple has fallen to $134 a share. Zoom in a little bit. There. You can see a little better as how we're dropping in our current trend. More pain to come as it looks. Oof. This is not rally conditions. The souffle, Tesla, seeing the same pain. Alright, seeing the same pain. I'll have to mark that out. I guess I haven't done any trend lines. Netflix still taking a kicking. It's amazing how similar these charts can kind of be. The same sentiment going into the tech stock, as well as the SPX. But then also when we look at oil, all right, what do we got? This hour it's starting to come up, but we had an initial dip in oil in everything across the board, it looks like. What a kick-off morning. So let's see here. Fundamentally, all right, I think we're going to be coming down to test this trend line, and we broke below it before, so we'll see if the price of oil has finally topped, if the beginning of the recession is nigh. Yeah, that's right, the beginning of the recession. All this pain has just been fluff, not even the tip of the iceberg. Isn't that kind of scary, folks? But looking in, all right. Oof. Wow, I already called out on Twitter earlier while it was going up that it's gotta come down, that we are looking to retest this range now that we've fallen out of here for support for Bitcoin. We'll do a little zooming. These earlier lines are pretty much garbage. So here we go. Let's go out into the daily. Make the daily argument. Look at Hex as a whole, long term. Alright, so this had marked a long-standing slope of resistance. Delete. Bitcoin did break out of that, decided to test sideways for a bit, but now she's got to go back down and double bottom here. We came down to touch these levels, so it won't want to go up until it confirms this is a bottom. So the sellers are here and the buyers are not. It will drop until it bottoms here, looking for buyers. It may fall lower. These pretty much all act as lines of support as it continues to fall. And really, you can see my maximum pain line set at 3 grand Bitcoin. Isn't that scary? But I would have normally said it would stop right here in this range, between these two blue lines, between 10,000 and 12,000, basically that 11,000 key marker range. But there's a lot more pain to come to the market. I'm pretty sure once we hit here, it's not even going to be the bottom, because of the fact that Bitcoin has never traded in the middle of a recession, and what might be a worldwide recession. So this is going to be a different beast than we've seen before. So I am basically marking how fast it's going to crash. There's no doubt in my mind it's coming down to this range. I believe lower, depending on how it comes down in trades. We may get a rally here thinking there's a bottom in. But that's a long ways away. We still got to get down there. And first off, before Bitcoin makes its next decision, it's got to come down to test 1760, 65 or 675, somewhere in this range. She'll have to come down and bounce off that. And in this case, because of where everything has been positioned, Ethereum actually led the charge as an indicator into the line of resistance. So Ethereum, the altcoin, is in the lead, and Bitcoin is kind of following its decisions at this point, is what it feels like. And Ethereum right now, yeah, its test line is 940 roughly. Could even get lower than that. So this test line though, 935, 940, somewhere in this range. Ethereum's got to come back to retest that before it even wants to go back and retest this long-standing line of resistance. How long-standing? Zoom out. Oh yeah, let's zoom out. Okay, since the down of May 5th. Wow, May, June, a 2-month line of resistance that it has not been able to crack and use as a line of support. But we are going to come back down to retest these long-term standing supports. So we're bouncing in this flag, and it's got to make a decision, rally or down. But with the pain in the market, the lack of risk on when your tech stocks are dropping, it's not a flag for risk on. So at this point, investors in Ethereum, I'm thinking it's going to drop out of the long-standing trend down to this yellow one and fall down all the way to this 472. It has room to. I'll reassess after it drops to see if there's any support lines, but I'm expecting a lot more pain, folks. May see a bounce for another week in these lines, but I do believe we're going to lose that argument. And interestingly enough, with all of that pain in Bitcoin, Ethereum, and the market, I even called out BNB. Yup, same pain as Ethereum. Starting to see some similarities. But then let's look at Hex. Whoa, that looks nothing like Bitcoin, Ethereum, Hex. Whoa. This is a healthy chart. Yes, we're seeing some mega pain, but we are seeing constant healthy rebounds. There's actually still healthy sentiment in this chart. So to see what's going on with Hex, as I feel like in this range that I've marked out between a bottom of 1.4 cents and this larger of 8.3 is our sideways trade. We might even get, up to here, the 10.5. But this is basically our trade zone as I am seeing it, because I think we are in the sideways portion, the maximum pain portion of the trading chart, the psychology one. Go check it out on Wall Street if you don't know what I'm talking about, or some of my earlier episodes if you don't watch those. And if you're still here, I'm finally saying it. Smash that like and subscribe and comment for the algos, so I can keep giving out this good information. I do actually occasionally monetize these videos. Of course, when I try, YouTube says no, so I've kind of given up on monetization. I'd rather talk to you. And this information, when I'm doing it, I'd like to get it out right away. And the monetization seems to hold it up for hours and hours, maybe days. I'm like, no, I'm not doing this. I'm not playing this game. So, into the hourly. And this is why I get excited. Do you see what I see? Do you see what I see? I see a very healthy chart. Look at this. Look at this. Like, do I really have to draw the line around it? Like, oh, look at that dolly. Oh, we've got waves on the ocean. We've got waves on the ocean. We've got, like, That to me just looks beautiful. Look at that flow pattern, an actual exchange, and the volume spike underneath. Let's get that changed back. Well, we've got this volume spike. Oh my god, the volume has picked up. Like, I can, if we shrink this even more, we'll see that the volume, let's go to the day chart. You'll see it there. There we go. Too big. There, we had that big gap, and we had the return of volume. The return of volume signaling a bottom. In here, no volume trading, like, nope, pain to come. Nobody had any faith. This return of volume is basically what's signaling we've got a tradable bottom, a rally for now. Could there be more pain? Is this the true bottom at 2.9 cents? I think there is room for more pain, but the chart right now is trading what I call healthy. So zooming in on this again on the hourly, because the action is getting even more than the day, we can see how beautiful this trend seems to arc. And so again, if we're marking how this chart likes to flow, we've got this rounding effect. If we continue the rounding effect, what happens? Oh, we start to come back up this way. Will the rounding effect continue? Well, this chart seems to be very healthy, even though the pain is coming in everything else. And even though we've got a bit of pain still trading today, like, overall, this through the day, into July, into tomorrow, the next 24, 36 hours will tell me if this theory is true. If we can start to come up to test this, we might actually get up to retest and crack 6 cents. But when we get to this blue line, there's always the room for down. Like, right now, the interesting thing is there is not hope anywhere in the technical analysis for anything else. For anything else that I'm looking at, unless you're talking about Lockheed Martin in the actual stock markets, defenses. They probably got a good 15% uptrend in the next 3 months minimum. Defense spending intact, even though consumer spending isn't. But HEX spending seems to be intact. So as I zoom in and look at the RSI, the hourly RSI and MACD don't mean a whole lot. So I see my trend there. I would like to keep an eye on the 4 hour though, for what's going on for this trend. This is where I'm feeling the bottom in. So let's look at the RSI conditions. We've had extreme oversold conditions this entire drop. Now, we've seen a pump up to see this slow down, and even with this crash, we've seen, we're trying to find a bottom here for the day at possibly 3.3 cents. That's where, all right, come down to this previous peak here all the way down to here, but this does feel like that bottoming effect where the RSI is going to agitate and spring up. Like, we've had a very little bump where the RSI is still extreme oversold conditions over the 4 hour. The MACD is testing, floating, toying with the idea of green impressions. And basically, throughout this day, I have a funny feeling that we're going to, on the 4 hour, as we trade into tomorrow's market, say 10 hours from now, that we are going to see green impressions on this MACD, and that the RSI is going to be picking up, and that the upslope of this trend may have begun. I'm feeling kind of optimistic. This is strange because the TA, fundamentally, market's effed. A lot of pain has to come because follow the logic here. The market starts to crash because to chase inflation, just to get gasoline and food, the essentials, people can't spend on other things. And massive layoffs are coming, all sorts of things. So basically, people are going to be living off their savings. The savings are already exhausted, living off the credit cards. Those are pretty racked up. So if they own crypto, if it comes to a choice between starving to death and selling your Bitcoin, what are you going to do? I mean, I know I've skipped a few meals, but if I have to sell my assets for groceries to live another week, I'm going to choose life. And I'm pretty sure most others will. And that's the kind of dire situation that people don't want to hear that is coming to the market. It's not going to affect everybody, but that kind of pain, like, people are going to have to turn to sell their assets. And strangely enough, Hex has such a community that knows not to ape in everything they have side savings, to have properly invested, that the community that already exists may have screamed because the bear market started sooner in Hex than everything else. It flashed out. Yeah, there's problems in the market. We're cashing out. And it's cashed out. It may have cashed out at its maximum pain. Like, that's where I'm just blown away that the TA is holding this strong when the fundamentals of the market around are crap. So I'm hesitant to make a price call on Hex right now. I made the rest. I make it firm when I see it. The TA says bottoming. I just can't believe it because the fundamentals in the market are crap. But the Hex community is strong. The belief is strong. I believe it. I still own it. I haven't sold it. I keep buying more. At 2.9 cents, what I did, I called the bottom for you guys and I grabbed that. It's still an in-profit trade. I know I said I'd start calling the tops, but I did inference, I think, on Twitter that it was going to go to test 6 cents. So as soon as it didn't make it to 6 cents and we found this resistance start falling back down, I was at work. I didn't have time to actually say something about this. So this is where I'm letting you guys know that, hey, if I call a number and then I guess, like, when the top was in, I'm sorry, I'm just not there to call that. But the profit in general is the trade in general is in profit still, and that's the question: is this another little bottom? Is this flashing yet again another buy signal? It might be. I'm feeling that again, which is so strange because the fundamentals in the market say no. So I'm afraid to call anything firm, but I'm telling you what I'm feeling. And I'm not a financial advisor. This is just me learning to read the tea leaves, what the trailing indicators of the MACD, RSI, and volume tell me, how I can read those, try and gather the sentiment as the rest of the market is trading. A whole bunch of factors kind of give me a feeling for what's going on here. And you can do this too with your own research. I keep saying the Maverick of Wall Street, excellent trader, excellent educator. That's where I've been learning a lot of my main market knowledge, which lets me understand why the pain's coming to crypto so heavy. Yeah, I know the bear market cycle happens anyway, and I haven't been here to see the previous ones, but so maybe I am wrong, but just calling what I see it. Not a financial advisor, but I have a little bit of fun toying around in these market analysis. Now, with all that said, let's take a closer look at Ethereum, because Pulse Chain, yes, Pulse Chain, we haven't talked about that in a while. I'm trying to sound like Bane, and I think it failed. Anyway, Pulse Chain, yes, still being programmed, still coming to market eventually. Ha ha ha. I don't even have the optimism to try and put a date on it and go, hey, it'll be done when it's done. But when it's done, when it launches, here's the question. So I'm marking out prices that I feel Ethereum can go to. And the pain in Ethereum is actually a good thing, to a point. Okay? So basically, this maximum pain line in Ethereum that I have marked at 450 is A-okay with me. A-okay. This line, however, down here at 113, this is the risky pain line. Why is that? Well, alright, so Ethereum crashing, when I had done some math in previous videos, I had explained the size of the liquidity for Pulse when it launched based on the Ethereum network would be like trying to do high speed maneuver steering with an oil tanker. Like, it is a heavy anchor of a liquidity pool that would be hard to tank or hard to raise up. And so I saw slow, gradual growth, like growing a mountain out of a hillside. Might take thousands of years, but it will go steadily upwards. Um, this assessment changes as Ethereum drops because Pulse Chain is a fork of Ethereum, and it'll take a current system state of it. So as it crashes, it'll take that ratio state, which is kind of beautiful. Kind of beautiful. So as the liquidity for Ethereum crashes, it drops, it becomes easier to affect economically. And as Pulse Chain is a copy of that, it will basically launch with a lower essential value of liquidity in it. And this means that it'll be easier to affect price, easier to put price up. It'll be launching much closer to a price floor as Ethereum is. So now, the interesting thing is I talked about true value of the network when Ethereum was around $3,000 a coin, and I talked about the true value being around 2.5 tenths of a cent. Was it hundredths of a cent? Oh, I gotta go back and look at the math. But the point is that what I was talking about was the true value of the network was between a 20 to a 25x, basically, on your sacrifice tallies if you got in day one. And that was basic round loose numbers, which is insanely high. That would lead to a lot of people wanting to take profits, but it gave a lot of room to launch the network at a discount, at a huge discount. As Ethereum drops, the ability to launch that network at the discount kind of shifts. So basically, if you take Ethereum and you put it to $120 a coin, right about that range, $120 a coin, and you divide it by 1.2 million, made it 1.2 times more abundant or cheaper. Divided by that, you get a price of basically $1 for 10,000 coins at the $120 mark. Basically, Ethereum is at a price that is equal to the sacrifice price without volume bonus enhancers. Wow, that kind of breaks it to a same number. That's kind of scary. So if Ethereum drops to a price lower than that, essentially Pulse Chain, if it launches, would be more expensive if it kept that. Now, like, as the assets, what does it matter? Launch it more expensive. Well, the fun thing is you're trying to match here. So the problem is p-hex and e-hex, p-Chainlink and e-Chainlink, p-Shiba and e-Shiba. When you launch the network, if Shiba is, let's say, or like whatever, just pick your random coin and just make it an easy number. Let's say it's trading at 10 cents a coin on the Ethereum network. When Pulse Chain launches with all its brand new liquidity and a brand new copy, and people are, prompted to come use it, if their coin launches at more than 10 cents, worth more than it is on Ethereum, or, that is actually an interesting thought experiment. I haven't played this out because I've been so busy mudding. I am playing it out right now. So essentially, a question is, if my asset is worth 10 cents on the Ethereum network, and we all kind of assumed it would trade at a discount, that the price would be lower on Pulse Chain than it would be on Ethereum. That has been the general mindset. But if Ethereum falls below $120 or at $120, you're talking that essentially if that value is equal, that the whole idea is if you trade at 10 cents, trade at 10 cents, what does the base have to be trading at? So for the ratios to be the exact same, if e-hex is 10 cents and p-hex is 10 cents and Ethereum is $120, then it has to be Pulse for $1 for 10,000 coins, or 1/100th of a cent. Yeah. So with that, that's where, okay, but you don't have to launch the asset at price parity. You don't even have to launch it at a discount. I'm just realizing it could be launched at a higher amount. But when you've got all this pain in the market and you launch a brand new network with liquidity and the assets are overvalued as opposed to everything else, people, will they invest more and pump that price up, or will they start dragging it down? Like, that's the whole idea of the discount, is to kickstart a trade in the upward, that this should be just as valuable, so we're going to give it to you on a discount and let you prove that it's just as valuable, has been the thinking. And so now the other interesting factor that I'm not taking into account here, which gives us some wiggle room, is the 24 to 48 hour pre-bridge window. Now, you guys want, I will bust out some Excel to look at this, but I wanted to give you some talk and let you know where my thoughts are. So during that pre-bridge, you're going to have an interesting phenomenon where the Ethereum state without value can trade and rebalance. So what's going to be the sentiment? What's going to happen? There's been so many people that missed out on Pulse and Pulse X that want to get a piece of that generally pre-bridge, like, everyone's been stocking up crypto so that they can buy Pulse. They're going to trade down those altcoins, the Hex, the Chainlink, the Sheev, anything else you can mention. It's all going to get traded down pre-bridge as people are buying Pulse. So that automatically puts those alts on a discount. It resets the ratio level. So if you can assume that there's going to be at least a 25% sell-off to try and grab Pulse, well, that means you've got room for Ethereum to dip lower, or you've got a room of that discount appearing if you matched price. So even if Ethereum gets to the mad line down here just below 120, that's okay for us. That means Pulse Chain can still launch with coins on a discount at a price comparable to Ethereum, well, much lower, 1.2 million times lower, but that's still favorable to the sacrificers. Like, if you think that a price around 2/100ths of a cent, so double the day one sacrifice price, just a 2x, just that kind of increased reward recognizes most of the official sacrifice set, and especially with volume bonuses, and that would still allow, like, if they're all on a 25% discount, like, still they'd be at a I should just do it on Excel. I'm probably butchering this. But the point is, in my head, the way I'm seeing this is we've got room for Ethereum to drop, and then the low liquidity that will be in the pool at that price, like, it'll be so much easier for Pulse Chain price to pump when it launches, because the liquidity pool will be so much smaller than I had initially anticipated when Ethereum's price was so much larger. So if Ethereum basically, I expect it will have come down from a drop 10x in price, which means the liquidity pools will be less than a third of what they were. It's good. It's good for Pulse Chain. I'm going to have to actually break this on Excel. It has been a while, but my thinking is that, seeing this crash in Ethereum is fine, as long as we're not below the $120 value when Pulse Chain launches. Got lots of room to recognize sacrificers and leave the alts on discount, big discount, to try and encourage growth to come in and grab on the network. We'll see how it plays out when Pulse Chain launches, if it can beat this kind of drop. And as a new network dropping in a bear market, I believe it would still encourage investing from a lot of the smart money and a lot of pumping, even when there's a lot of pain in the outside market. So I think we have a lot of good things to see coming when Pulse finally does come. There's, interestingly, a lot of hope still trading in Hex, so there's money to be made there, I'm pretty sure. Keep a close eye on it, like I am. I'll do the price calls as I see them, but for now, the chicken bones, the tea leaves, and the magic 8 ball do not agree. So they're all saying different things. So I'm a little confuzzled. When they all say the same thing, I'll be sure to let you know. And Ethereum versus Pulse Chain, the math, I'll put it in Excel and prove it this weekend because I've got some time off. But basically, as long as we launch before we hit $120 value of Ethereum, I think we'll be a-okay. If we drop below that, trying to have our market cap for it recognize sacrificers and properly compete with Ethereum could be an interestingly awkward situation. Yeah, I'll wait till I lay it out on Excel so I can actually walk you guys through it. In the meantime, I hope this has given you guys something to look at and understand. Some hope. See, you can see right here. Let's look at Ethereum. Ethereum, we're looking at the 4-hour chart, but looking over the last several days has just been pain on the MACD as it's getting larger in its deviation, larger and larger red impressions as you head into oversold condition. Hex, during that same period, went, oh, we're reducing that. We're going to head in the opposite direction as the RSI starts to gain some health, and we're going to start rounding out for a bottom. So the sentiment in Hex, basically as money pulls out of other cryptos, it's heading into Hex. Seems to be the kind of sentiment where the price flows are being found first. One of the joys of kicking off our bear market first is our bear market will come to an end first. So, yeah, strange optimism in Hex. Can't back it up with anything meaningful, and wouldn't say buy right now. The indicators just aren't flashing it firmly. It could still decide to round out down to there. I mean, that would still be a rounding path. I mean, how fast is it going to round? That's the question. And I'm waiting and watching to see, but it is very healthily doing its own thing outside of the rest of the market, waiting for Pulse Chain to launch, as all of us have been slowly aging to death waiting for that. But it is coming, folks. The work is progressing. The sacrifice tools are at least completely well done. And that Go language is coming along. And other than that, when there's major updates, I'll be sure to let you know. In the meantime, thanks for tuning in. Hope you enjoyed. Stay frosty.